Hey everyone, welcome to another FogCutter Live. I'm Mike Curtis, along with Preston James, founder of Trader's Edge Network, options trading legend. And Preston, we got another just packed week to kick things off and discuss what's on tap coming up.
Yeah, we do. We're starting out the week here. NASDAQ on fire. The
New all-time
AMD,
high.
OpenAI, the gap higher in AMD, the price action, the volume. My jaw's still on the floor.
Yeah, lots to discuss. So why don't we just kick things off, kind of talking broad markets? Like you said, NASDAQ hitting a fresh all-time high this morning. S&P, I think, is right there when I checked it a little while ago. So really what we've seen these last several months is a couple day of a pullback, some profit taking, and then the uptrend has just continued to resume as we've marched to new highs, new highs, new highs. So, Preston, I know you've just really been mainly fully invested, just kind of riding this wave.
Yeah, and we've been saying this for a long time, and even more so recently, because, well, we've been saying for the longest time, well, since April, since we got the fall through day, it's go time for stocks. Yes, it's going to go up. It's going to have its pullbacks, but most recently than April, though, we've now had rate cuts more in focus and talked about. And historically, over time, lower interest rates and the perception of lower interest rates going forward propels the market now. And we're seeing the effects of that.
Yeah, definitely. And the trend just keeps marching, even in the face of the big news. Of course, last week was the government shutdown, and I know some people in our Traders Edge network community were, our forums were kind of lighting up. People were worried about that. And Preston, you've been trading for longer than me, but this isn't the first government shutdown you've traded through.
No.
Maybe you could just speak to that for a minute.
Yeah, I mean, it's the words sound just ominous. I mean, when you say the word shutdown, I mean, do you is the whole world coming to a close and things just completely shut down? Well, we know the mail's still gonna work, the essential stuff's gonna work, and I think people also, have just matured along knowing that these are, partisan, basically, games in Washington, and that they're most likely gonna get resolved. But I think too that the overwhelming forces at work here, especially with the AI idea whose time has come layered over everything right now. An idea whose time has come is pretty much impossible to stop. I mean, I've said it before, armies, earthquakes, I mean, 100 IRSs, you can't stop an idea whose time has come. And that is it's ripening in front of us, and it's got a good stock market cycle backdrop right now. How do you stop this?
Right. Yeah, pretty powerful. So we've just kind of been full systems go. Preston, I guess as we've been marching higher, the market keeps climbing. We see these couple days of a pullback. We just continue to push to new highs. What will what will turn you? Because I mean, like you've said, it's go time for stocks. You've been pounding the table since the end of April. We've been pretty much fully invested really since May. Right as that follow through day happened in April. It's not like we shove all the chips into the middle of the table, right? But then we started building, building, building. So when do you start to take your foot off the gas a little bit? Is there anything you're watching for or looking out for? Anything like that that shoves you a little more into, hey, I'm gonna maybe close some positions. I'm gonna start to scale back a little bit. Anything that you're watching for on that
Well, the
front?
the big smile on my face came that we have this live event coming up in Atlanta, and it has just been weird where we get out of town, we get away from the land office, especially to the events. We're in front of everyone. All I wanna do is trade normal and just yuck it up and have fun with everyone. But how many times have we had a market turn happen both to the upside and to the downside when we get out of town, Mike? And that's just right around the corner. So I couldn't help thinking about that. But
Yep.
but
We'll
but
usually start traveling for Atlanta, I think the 14th, 15th. So yeah, beware of that week. We'll
the
see what
travel indicator, yeah, when we
the
leave the land office,
the
it
pirates on
is.
an airplane indicator.
Oh
So
my gosh, it's so crazy. I'm also Mike, there's 2 sectors I'll name right now that are essential for the economy and are completely out of favor. One is chemical stocks and one is insurance. They're completely out of favor. I mean, if you look at, and these weren't even the ones, well, we'll just pull up Progressive Insurance, for example, PGR. If we take a look at this, I Progressive's probably working with AI and all this stuff, but I mean, as a sector, this is Progressive. This is one of the leanest, meanest, most bad A insurance companies in the land, out of favor. And for chemicals, if you look at LYB, LyondellBasell, increasing dividend payer, big player in the chemical space. Chemicals, I mean, and plastics and things like that that are just so behind the scenes in the economy, out of favor. So I watch, am I actively trading names like that? No, but I'm watching for
Mhm.
when we do take a break. Our markets have a habit. I heard this long ago, and it is so true, of going to extremes and then staying there. And they have a habit of doing that and acting irrational far longer than you can remain solvent, meaning it's not for us to, we just get to sit back and basically trade the market at hand, but knowing that they can get to extremes and they can stay there for an unnatural amount of time. That's where we are on the upside.
Right.
But it's not, we know it's not going to last forever. And I know people have probably heard this over and over again. I'm going to say it again. We average a market correction. We've averaged one a year since World War II. What a market correction looks like is what happened last, well, when we got to the April lows, the tariff lows. There's always going to be different reasons why
Right.
a market corrects. And a lot of times people can run around and say, this time it's different. It's different. It's different. It's different. This is it. This is the one. No, it went down as a market correction. And
Right.
so we average one a year. And so we're probably not due. We can pull back, but a market correction is identified as a 10% pullback in the major markets. And when we talk about those, that's the NASDAQ and S&P 500. This one actually was closer to a 20%. But as it goes down in history, this is the one a year. So yeah, we're feeling toppy and we're feeling a little irrational here. But markets do correct. And so when they come around, Mike, I almost like the corrections. It just kind of it gives me anyway. I go on walks a little bit longer. I'm doing a little more research. I'm building a watch list.
Mhm.
It's almost like an exhale knowing that a correction that we average one a year, especially if we haven't had one for a while. But we're kind of fresh out of the most recent one. That's kind of the context, the macro context, if we stand away from it. Can I show you 3 charts? There's more than this too.
Yeah, for
That
sure.
just shows how forgiving of an environment and how bullish an environment we've been in. If we pull up Palo Alto Network, back on July 30th, Palo Alto, a major player in cybersecurity, that gap down was July 30th, and they missed earnings and they reset their guidance a little bit lower. If we were in a bearish market or in a market correction, it's so unforgiving in times like that that this stock would just be way lower than it is right now. But given the backdrop, look where it is just months later.
Yeah, just
A
climb pretty much
very
straight up.
unforgiving market. Let's look at Marvel, MRVL,
Mhm.
Marvel Technology on August 29th. an earnings miss and lighter guidance.
Mhm.
But the backdrop of the force of the entire market right now can't have it. It can't have this trading lower for long, just because also again laid over of this AI unfolding idea whose time has come. If you're anywhere associated with chips or anything, I mean, it's so forgiving right now. And let's look at Applied Material, a real OG stock. This one on August 15th missed earnings and reset their guidance a little bit lower. What happens in this market? This is what I mean, you could almost like be blindfolded and throw a dart at anything related to the backbone of AI, chips or anything like that. And it's almost like the blind can do well in a market like this, but that's it, this is not going to last forever. But
Right.
the type of wave that we're in right now, these three examples from different sectors just show the strength, the underlying strength.
Yeah, and can I throw one more up on there? Just the
Absolutely.
semiconductor ETF, ticker SMA. And it kinda shows a couple of things, Preston, to your point, it goes to extremes and it stays there, right? Like, if you were looking at this in July, for example, right? It put in a low at 175, climbs up, got right up near 300 in July, kinda consolidated for a minute, right? We saw a little sector rotation happening and things like that, but then this last month, it's just exploded again to where we're at a double from those April lows, right? Run 75 up to 350.
This
You
is an
can just
entire
see,
sector that's
yeah,
doubled.
that's, and the makeup of what's in this ETF, it's Nvidia, right? It's Taiwan Semiconductor, it's Broadcom, it's Intel, right? It's all of those. And you just, to your point, Preston, of it going to extremes and even hanging out longer than you might expect. Because I bet a lot of technical traders would have been screaming all through, June, all through July. This thing's overextended. It's going to crash. It's going to pull back. It's going to, topple over. And it's just continued. I mean, it did consolidate for a little while in there, right? For about a month, a little over a month, and then just continues to have all that bullish momentum, the money flowing in, to your point of things go to extremes and the power of the idea whose time has come. This is just an ETF that encapsulates kind of all of that right in one chart.
That's really demonstrative there too. And I can't help but think of this quote from Peter Lynch, who was the Fidelity Magellan Fund manager who did so well over several decades, even after it got in the multi billions. Anyone that can still keep their performance, like Buffett, Lynch was one of them, where billions now are at play, and you still get your number. Hats off, hats off. But the quote he said was, "More people lose more money fearing the next correction or bear market than are lost in the bear market or corrections themselves." And what that means is they're out of the market right now, out of fear. I don't People fear that we're going up and up and up. So there's a fear, and so people don't participate out of fear for the next one
Right.
than what's actually lost in those market corrections and bear market. And maybe to tie a little bow on that, we know how long those every year market corrections that we get, we know how long they average. We know this because of Bill O'Neill, and we stand on the shoulders of all these greats. This has all been calculated. So between the time a market correction starts, by the time it goes to the trough and
Mhm.
comes back out, on average, it's 14 weeks from the high that it got to. By the time it suffers the correction, 10% on average is what that is. And then by the time it recovers, It's 14 weeks across. And I remember when we were sitting in Las Vegas, we were sitting doing a planning meeting down there, and the Mirage Hotel was out our window, and the Mirage has been gutted. I mean, Mirage just means Las Vegas. It was over there. They're making it into a Hard Rock, so they're building a big guitar. But at this point, it was all gutted. And we were watching during the 2 days that we met down there, the NASDAQ going down a comma.
Yep.
They were having comma days, which means 1,000 points or more. We were just watching the market implode. And now that I got Vegas on my mind, I got to remember the point I was making, Mike. When we were seeing it, and we're like, we're obviously in correction. And we were both hearing texts and stuff, people that we really lean on, people that were like, this one's dead, that's over. We were hearing it. And all to say that we were looking at those lows, looking out at the gutted Mirage Hotel with the market in shambles, the Mirage in shambles, and people close to us saying, this is it, this is it. And I remember saying, did you guys remember, guys, on average, that from the time it starts, by the time it recovers, it's 14 weeks? And so I had pinned it on there that if it's going by average, this is all going to be done, which means we're going to recover all of this by like sometime in like late June. And you guys looked at me, they're like, there's no way. There is no way. And guess what? It ended up being 15 weeks. And
Right.
again, the average is 14. So sometimes they come out of them in 12 weeks, sometimes it's 16. But still to this day, I can't believe it was 15 weeks by the time it did it.
Yep. Pretty amazing.
Pretty amazing.
And luckily, we saw it starting technically. You start seeing it reversing. We had that follow through day. I think that was April 22nd. There's a few things that started leading us into feeling more and more comfortable, confident in trading that recovery, catching the vast majority of that recovery, which was just amazing. And then on the flip side of that, we can start, if that next correction were to hit, right? And just because that was in March and April doesn't mean the next one's going to hit exactly on the 12-month mark, right? It doesn't mean it's going to be
Exactly.
right in March or April. Again,
No,
it's
it's
the
not going to be the
average.
second Tuesday of March
Right.
every year. Por favor. I'm saying that
Right.
out to the sky, not to you, but come on.
Definitely. But
Yeah.
we can start seeing, just like there's the signals and, technical indicators, other indicators that we're starting to pull out of that correction. We can start seeing those as well as as the trend is breaking down and maybe starting that correction as well. So stay tuned in to these FogCutter lives. Our insiders are always plugged in. We're sharing that information as we start to get more defensive, things like that. So we'll be here to help guide you through when that next one is potentially on taps.
And Mike, in the broader, these cycles, these help, these up cycles take 3 out of 4 stocks with it. It's not taking Progressive Insurance with it. It's
Right.
not taking LyondellBasell with it, however you pronounce it. So there's some sectors that aren't participating this, but 3 out of 4 stocks go the way of these cycles. And so we can lean on that for an edge and not listen to the Kiyosakis out there, would have you scared, like I'll say it, witless right now and not in stocks anywhere. There's just unrelenting voices out there all the time. But if we can trade what we see, we're in the cycle. 3 out of 4 stocks go the way of this. If we have that edge behind us, it sure makes picking our spots with certain stocks with our setups. I love knowing that backdrop. That's the big takeaway of why we care about where the stock market is in its cycle.
Yeah, definitely.
So, but let's not I just want to make sure that we spell out that obvious thing, that obvious takeaway.
Yeah, good stuff. Good stuff. Well, on tap this week, it's relatively quiet on the earnings front, right? Earnings season usually kicks off pretty heavy second or third week into the quarter. So we've got about another week and a half of more of that quiet earnings front before all the big wave of earnings starts to hit.
Sure.
So keep that in mind as we're coming into that earnings season here. middle towards the end, from the middle of October to about the end of October is where we just see a ton of those reports hitting. I know Thursday, the Jerome Powell is scheduled to speak. Relatively quiet on the economic calendar front. The other thing, Preston, is with the government shutdown, some of these reports might not even be released. Like we
Good
didn't have
point.
our usual jobs report
Yeah.
on Friday due to that shutdown. So just stay tuned into some of those things and research that, as it's just going to be ever changing. And I'm guessing we probably pull out of this thing within the next week or so, maybe two at the most. So I think the market is why it looks past this shutdown is like you kind of spoke to that earlier, Preston. It's these political games. They'll pull out of it. Everyone gets their back pay. It's kind of a hopefully it's a nothing if they can resolve it and get through this thing.
Right, and I try to think also of just the institutional, just gargantuan size that the market is. I mean, budget for the United States is 7, 8 trillion a year. NVIDIA is worth 4. One company is worth 4 trillion.
Right.
I mean, it's and the powers that be that lead I don't know. Anyway, markets the market's so unfathomably encompassing in our world today
Yeah,
on a worldwide level basis too. I mean,
for sure.
it's really something. I just want to add too with the light economic news rollout this week. Yes, the for those SOBers out there, of course, that stands for Sleepover Bandit. I'm eyeing already some names for this week. This looks a real ideal week to operate on the sleepover. That's from Thursday to Friday.
Yeah, love it. Well, cool. As we wrap this one up, we wanted to shout out. We got a fun story. Our insiders, they have some milestones. One of them is a $250 club. Right, they've hit their first 250 in trading profits. We got a really fun story in from Carl V.
I
He
love
said
these. I can't wait.
he said, as Preston would say, "Are you freaking kidding me? These
Huh.
returns are amazing. My first week was a little rocky. He had a SLV money press that he'd been working through. He made a little mistake, which most people make, right, as they're getting up and running. He said on a Saturday morning, I almost had a heart attack when I saw 500 shares put to me. Schwab wanted $15,000 after I calmed him down. I remembered something Mentor Stella had said on the old video. If you have the stock put to you, don't worry. Just turn around and sell it. Broker's going to be okay. They're going to float you the capital to cover the share purchase. And then you can just sell it the next trading day and all as well. He said on Monday, I sold it. Since then, things have been going great. 30% return in a little over a month. So awesome. Thank you. So Carl had a couple learning lessons
Nicely
as he
done.
went through that experience, but stuck with it, seeing those returns.
Look at his
Awesome work,
screen up in
Carl.
front of him too. Not to
Isn't that
interrupt you,
fun?
Mike, but before that went away, I wanted to note that. That's
Yeah,
great.
you zoom in on that, you can see his account performing. Awesome work, Carl. Keep at it. I'm sure even since then, his accounts continue to grow. So great job, Preston. Thanks as always. We love these. We love helping you hopefully cut through some of the noise and the fog out there as you approach your trading week. And so, like always, we'll be back next week with a fresh take on what we're seeing out there.
Yeah, these are fun, Mike. Thanks so much for all you put into these, and it's fun to touch base on a Monday. We usually
Absolutely.
do this by ourselves with you in the door, me in your door,
Right.
and I like this better. We can kind of plan and talk about a little bit more stuff.
Yeah, we're having these conversations anyways. We say, hey, let's flip on the camera, record it,
Turn it
help the
on.
folks out. So thanks, Preston. We'll sign off and catch everyone next week.
All right, take care, everyone.